Grant, it's good to see you. How are you doing?
Jimmy, I'm doing great, mate. It's been a long, long time. I'm so glad we got to catch up again after all this time.
Yeah, that's right. We first met because David Tice introduced us, and he is a producer
Right.
on my documentary series. But we actually met for the first time at the Drake Hotel in Chicago, which, since Mission Impossible is coming out, I'll point out was a key plot point in the first Mission Impossible movie.
Yeah, absolutely.
Yeah, we go back to 2013. But the thing I want to talk about the most is I want to get into your life story a little bit and really get into finding how you got to where you are, because you kind of have a unique career. You have your financial newsletter, things that make you go, hmm. And then you have multiple podcasts. Your newest one kind of focuses on something that I have a big passion for. And one of the things with my documentary, our new one's called The Fall of 2008. But what I think a lot of people miss is that with the dot-com bubble, with the housing bubble, with everything we've gone through these last 5 years, 15 years, I think what a lot of people miss is that it's not just these singular events, that we're actually going through, a 5 decade long, we're at a turning point,
Yeah.
a big shift, maybe even 100 year shift. And that's something I'm really excited about your new podcast, since it's such a focus for it. But we'll get into that stuff. First, I'd like to go back a little bit. And you have told a story about a date farmer. And so I was hoping we could kind of start with that, just to give people a little introduction to who you are.
Yeah, I mean, well, the story you're talking about, it's not my story, but I think it's a fantastic lesson, and it's a story told by a dear friend of mine. And what's been interesting is the reaction to that story. And it's a very simple story. This friend of mine, Tony Deaton, who's a very private guy, but he's an investor and a very thoughtful, purposeful investor. And he just kind of goes about his business very differently to most people in the financial world. And he told me a story one time. He went to the Middle East, Lebanon, I think, and he was thinking of investing in a company that grew dates. And so he went out he didn't know anything about the business, but wanted to understand the business and meet the family who ran it. And it was a multi-generational business. And at one point, the CEO of the company was taking him around, showing him these fields of date trees. And they came across a field that had freshly planted trees in it, tiny little saplings. And Tony said to me, he said, I know nothing about dates. So I asked the guy, I said, how long until these trees bear fruit? And the CEO said, about maybe 20 years until they're bearing fruit. But he said it'll be 40 years until the fruit's ripe and good enough and old enough for us to be able to sell under the company brand. And he said, how old are you? And the guy said, I'm 45 years old. So, you plant these trees, you're going to be, what, 85 when they're ready to sell the dates? He said, how does that work? And the guy just kind of waved his arm around and said, well, you see over there, that field? My father planted that field, and his father planted the field behind it. My great-grandfather planted that field. And it tells you all around us were these date orchards that have been planted over, 200 years of this family's business. And, the lessons in that story are many, particularly for the investment world. But about a year after I had that conversation with Tony and released the video, I was giving a presentation in New York. And what I did for my presentation, I took several clips from a bunch of interviews that I'd done that year, and I played the clips. And then I talked to the audience about why I thought that clip was important to me and what I'd learned from it, and the things that it kind of taught me. And I went through each of these clips, probably 6 or 7 clips, and I spent 5 minutes afterwards talking about each of them. And then the last clip I played was that one of Tony telling the story about the date orchard. And when the video went black, I said to everybody, okay, I've done all the heavy lifting for you. This story, you're on your own. Go figure it out for yourselves. And that was it. And I'm standing at the bar afterwards, chatting to a couple of guys. We're in New York. So we're talking about the Yankees or the weather or nothing really important. And a guy was kind of hanging on the edge of the conversation, obviously wanting to join in. So I said, hey, can you come and join us? So there were 4 of us chatting. And there was a pause in the conversation. The guy who just joined us said, he said, I can't believe you showed that story about the date orchards. I said, yeah, I love that story. I said, I just think it's a terrific example of what Tony does. And he said, well, let me tell you. He got really serious. He said, story changed mine and my wife's life. So, well, what do you mean? And he said, well, we were VCs and we were, working 8 days a week and 28 hours a day and, making all the money we could ever spend and so much more. And about 2 years ago, with one of our exits, we bought a small stake in a furniture company in the Carolinas. We just both love furniture. It's kind of a hobby of ours. So we watched that conversation. You have a Tony. We finish it, we open a bottle of wine and we sit down and we start talking about what we'd heard in this conversation. We both of us kind of zeroed in on that conversation about the date field. He said, and right then and there, over that bottle of wine, after that conversation and that story, we both agreed we were going to quit our jobs. We were going to buy the rest of this furniture business and we were going to build something that we could leave to our kids, that they could leave to their kids and build a family business. And as he's telling me this, there are tears rolling down his cheeks. In the middle of this bar in New York City, 4 strangers, and all 4 of us just end up having a big group hug, and we've all got tears in our eyes, and it's truly extraordinary. I mean, it just shows you the power of lessons that can be shared with people, and when they hit home, and a lot of people would have listened to that story and just not even thought about it, but when these stories hit home and they mean something and they resonate with you, they're incredibly powerful. And it's just a family doing what that family did. But to other people that hadn't come across thinking like that, hadn't really thought about their own lives in those terms, it was an incredibly powerful story that changed someone's life. So it's fun to have these conversations. And that particular story is one of many that I've had over the last 10 years with people that have resonated with me and have resonated with other people. And I think it's been a real gift for me to be able to share these stories with people. And you're a storyteller. You know the power of stories. It's extraordinary what they can do.
Yeah, that's something I'm really trying to convey to my children that, obviously I want people to see my films and see this podcast and everything, but it's really not about the number of views or anything like that. It's really about how much you impact somebody. And, if you bring somebody to tears during a film or, with the economics documentaries that I do, if you get someone to really rethink something that they haven't or think about something for the first time, really. So let's get into your investment newsletter and podcasts a little bit, and then we'll go back and maybe hear more about your career before that. But how did you start your investment newsletter? And was that a huge risk for you to get into that, or was it something where it was a passion, like just a side project, or what was your intention when you started?
Yeah, it was a side project, very much so. And it wasn't a risk. It was something I started doing back in 2009. And it was a means to an end originally. I was still working in finance at that point, and it was a way I had hoped for me to generate some business as a sales trader for a broking firm in Singapore. And it just kind of took on a life of its own, this thing that was a daily note when it started. And then I changed jobs and I started doing it outside of office hours just for fun. And, I just found it interesting to try and understand the world and to share ideas about the world and just get feedback from people to try and shape and own my own thinking about what was going on. And so it never dawned on me that it would be a business. It never dawned on me that it would be something that I would end up doing full time at any point. I did it for fun. And then, as time went on and more people started reading it, John Malden, who's become a great friend of mine, you probably know John from Dallas, John picked the letter up and liked it and asked me if he could distribute it for me to his readership, which I was just over the moon. I'd been a big fan of John's for years. And that was I was incredibly humbled for him to want to do that for me, and he did. And so I was given exposure to a huge audience, and they seemed to like what I did and the way I wrote it. And so I did that for, I think, probably 6 years. I wrote for John free, just for fun at the weekends. And it started to take up a lot of my time. And so at that point, I had other stuff going on in my life, and I realized that I just didn't have that kind of time to throw at a project just for fun. And so I thought to myself, well, look, I love doing this, but I can use that time productively. But if people will pay me, I keep getting emails from people saying how much they couldn't do without this letter. So let me just see what happens if I say I'm going to charge for it. And I was, completely ambivalent. If nobody had said to pay for it, I just would have stopped doing it, and I would have, gone on and used that time for something else. But fortunately, the audience was big enough that on day one, enough of that audience, it was a small percentage, but I knew the numbers going in, the kind of percentage of people that would actually pay for something that they've once got for free. The numbers worked, and so from day one, I had a business, a viable business, and I was lucky that I started it when I did. I think it'd be much harder today to build that business because it's a lot more crowded. There's a lot noisier, a lot more people trying to do that sort of thing. So I got very fortunate, and thanks to the start John gave me and the connection I built up over the 6 years of my audience, I had a business, and a lot of those people are still with me. Where are we? 16 years later. So it's been a phenomenal ride, and I've loved every minute of it. I still do. I've gone from writing daily to writing weekly to writing 2 weekly to writing monthly. So now I write once a month, and my audience has stayed with me, and they've probably taught me far more than I ever taught them. But it's just been a fantastic process. I've loved every minute of it.
Yeah, I read a book by John. I can't think of the name of it right now, but I remember it being
He's
really
written a few.
good.
He's
Yeah.
written a few. Code Red or the Millennium Wave, or he's written quite a few.
Yeah, it wasn't one of those. I don't remember, but I guess one of the things with my documentary, with interviewing all these people like Jim Rogers and
Yeah.
Peter Schiff, people look at those guys and think that they know what's going to happen and when really the thing that I found most interesting by interviewing them is they all say, I don't know. They're very modest about what they actually can predict. They're just saying, these are the consequences of some of the things that are happening in the world and in the economy. And whether that happens 6 months from now or 10 years from now, who knows? So kind of to humble yourself a little bit, let's go back to Tokyo and the Japanese equity market and housing bubble correcting there. So that was earlier in your career. What was it like going through that, and maybe the '87 crash or any of those early crashes? Like, what did you learn from those experiences?
Oh boy, I learned a lot. I learned a lot about markets. I probably learned more about myself than anything else. But it was kind of I was very fortunate that it happened when it did. I was a very young man. I moved out to Japan when I was 22 years old. I didn't go to college. I went straight to work at 18. So I'd had some experience at that point, but still 22. I was a young man, and I'd kind of been trading the Japanese equity markets through this kind of crazy 1985 to 1989 run up. Not really understanding what I was doing, certainly not understanding how the world outside my tiny little corner of it functioned. And I got thrown in at the deep end to a raging bull market in equities, and as it turned out, when I got to Japan, real estate, and we had the mother of all bubbles in Japan. So I wasn't really I wasn't looking at it with a critical eye. I would just deal with what I had to deal with on a given day. I wasn't standing back and trying to get an understanding of the whole of the issue, because I had a job to do and I didn't have the wisdom or the experience to realize where that fit in the bigger picture. And so we were fortunate that the market essentially just went up every day. I mean, it was unbelievable that market. It just kept going up and up and up. And so you tended to develop a very singular set of skills. You learn to trade a rising market, and to do that, to trade a market that was going up virtually every day is disarmingly easy to do. You just buy stuff and you hang on to it overnight, and you sell it the next day and you buy something else. I mean, it sounds flippant, but for the most part, it was that simple. And so you get complacent, you get comfortable, you think that's how the world works and how it's always going to work, and you get used to making consistent profits. You get blindsided when the market goes down. It's like, well, what the hell happened? And then you think, well, it won't happen again tomorrow. This is obviously an aberration, and for the most part, it was. And then in at the end of December 1989, when I was living in Tokyo at that point, the market stopped going up, and the market started going down, and it kept going down for 20 odd years, and the shift was amazing because you had a down day on January the 1st, January the 2nd. And it was, it was like, well, that's a bit weird. Market's going down, but it's a new year. We're bound to go up again. And then you had another down day, and then 2 became 3, and 3 became 5, and then we had a losing week and a losing month, and it was like something's changed here. But it's amazing when you get used to something functioning in a given way. It truly is amazing what it takes for you to finally believe that things have changed. And I think that's an important thing to understand for today's world, because I think the world has changed, and we'll probably come on to that later on. But it took a lot of us. I mean, the smart, experienced guys figured it out a lot quicker than the young kids like me that really didn't have any frame of reference to it. And it took a while before you realize this is a very different animal now. The market goes down every day. And so you need to trade in a completely different way. And the sooner you figure it out, the better. And obviously, it's tougher because we like things going up, rising tides, prices going up, people are happy, and you're making money just by buying stuff. It gets much trickier when you're trying to make money in a market that's falling, and everyone's temper gets much shorter, and everyone's pain tolerance gets much lower. It's a sea change in not just market direction, but emotions and temperament and all the things that kind of come together to create the environment that you have to operate in.
Where'd you go from Tokyo? I know you have lived in quite a lot of financial centers around the world. Where'd you go first after Tokyo?
I had just shy of 4 years out in Japan, and the company I was working for, Jardine Fleming, they wanted me to sign up for another stint out there, but I got married. I had a young daughter at that time, and Tokyo was a long way away from the UK, and so my parents and my in-laws hadn't really been out to visit us because it was just too expensive for them to come out, and I was a young guy, I didn't have the kind of money that I could fly my folks out to Japan. And so my wife then wanted to go home so she could be around family with the granddaughter, and the grandkids were, would move heaven and earth to get us back. And that's fine. We had a deal when we went out there, she and I, that I said, look, we'll go, and you've got to give me 6 months. And if you don't like it after 6 months, we'll go home. Even if I have to quit, we'll go home. But you have to give me 6 months. And then, after that, we'll talk. And those first 6 months, I came home and she had her bags packed 2 or 3 times. I was like, look, you promised me 6 months. If you go home now, I'm not going with you. But if you wait 6 months and I come home and those bags are packed, then we'll go home. That was the promise I made you. I remember coming home on the 6-month anniversary, getting out there, and kind of opening the door like this and hoping I didn't see any suitcases, and they weren't there, and nothing was said. And I just hoped she hadn't forgotten and was going to look at the calendar tomorrow and go, oh shit, 6 months is up. But it wasn't. And at the end of best part of 4 years, she didn't want to leave, I didn't want to leave, but it was the right thing to do for the family. So we came back to the UK for a brief period of time, 18 months I think, and then went to New York. I was in New York for all told about 7 or 8 years. Had a stint in Hong Kong. Then I went down to Sydney in Australia, then up to Singapore, and then I went to the Cayman Islands, where I am today. So it's been a long, strange journey. None of it planned. All of it kind of just opportunities that were given to me along the way that I grabbed with both hands. And I've been incredibly fortunate in everything that I've done, and I sometimes wonder how it's all gone the way it has. But I just had the best time, Jimmy. I really have.
What time frame were you in New York?
I moved there in '96. I was there until 2002 when I went to Hong Kong, and I came back to New York for 18 months after I'd been in Hong Kong for 3.5, 4 years. So I did 2 stints in New York.
And how did you feel about the .com bubble as it was going on? Is that something you got caught up in, or
very much so.
Your earlier experiences?
I had, and it's it was good and bad, because that bubble I recognized much, much earlier, because of my experience in Japan. And so I was very, very wary of that .com run up. And so I didn't, I participated on the way up in terms of my job, in terms of trading, in terms of, facilitating business for customers. I didn't put my own money into that market because I'd seen something like it, really not that long for a decade before. And so whilst I didn't make any real money on the way up, I definitely didn't get caught by it when it imploded. And that was, that was quite the implosion. Nasdaq falling, 85% odd. That was a real crash, and one that lingered and stayed down there for a long, long time. So I did get caught up in it, and I found that both 2000 and 2008, um, I I was experiencing those bubbles in real time because I saw them for what they were, and I was able to avoid them. I was able to avoid 2000, and I was able to make money out of 2008 because I got my timing right as to when to short that market because I'd seen those first, I'd seen how long they could go on. So it was a learning process. The first crash caught me completely unawares and taught me lessons. The second one, I was too gun shy to really know what to do. And by the third one, I'd seen two of them play out, and I had a sense of how it might go. And I had some bad days through it, but overall, I escaped that one in pretty good shape thanks to the experiences I'd had earlier.
Yeah, so moving forward a little bit, when we met in 2013, earlier we talked about how you never know how a conversation is going to impact somebody. But we had breakfast in 2013, and I had not seen the housing bubble coming, but I had started a house painting business to fund my film project.
Right.
And then that led to my documentary series where I interviewed all these people that predicted the housing crash and asked them why it happened, and opened this huge can of worms in my life, obviously. But by 2013, I had promised that I was going to condense these 3 episodes down into one movie. And I had said in 2012 at Freedom Fest that I'd be back the next year with it done. And I wasn't anywhere close to that. And I never was able to condense it down. I ended up splitting it into 3 films. But when we met, I was pretty defeated. And I had a producer, not David Tice, but a different producer that was trying to replace me on the project and had really kind of defeated me. And so when I met with you and was telling you about the project, I wasn't my normal self where I was saying, we're going to take on the Federal Reserve. I actually said
Right.
to you, I'm not making these movies thinking I'm going to bring down the Federal Reserve. And you go, oh, that's too bad. And so I've thought about that conversation so many times since then because I was so mad at myself that I would have that mentality and be defeated by this. But as we've seen these last, 13 years, these things can go on for so much longer than people
Yeah.
think. And so let's get into the economy a little more and talk about how, they replaced the dot-com bubble with this housing bubble. And we have, we had this crazy COVID response where they literally just printed money and paid people to stay home. And they've kind of gotten away with a lot of this stuff over the last 40, 50 years to an extent because the US has been the world reserve currency and because everybody views the dollar as a safe haven. But as we've seen with the volatility in the stock market recently with all this tariff stuff, the Federal Reserve has already said they were lowering interest rates and everything. But when stocks started to crash, we saw US government interest rates, start to creep up. So you mentioned that, things are starting to change. Things aren't necessarily the same. And, if let's say you're a 35-year-old or 40-year-old person in finance or just have your own retirement plan, your entire adult life, you've seen interest rates at almost zero and you've seen stocks just keep going up. Even with 2008, housing crashed for 6 years before it hit bottom, but the stock market turned around the next year pretty quickly. And so I guess what is the reason that things are different, and why should people be concerned that maybe we're not going to continue this last 15 years? Despite all the trouble we have seen the last 15 years, it's actually been, kind of cushioned by how they've propped everything up.
Yeah, I mean, there's a lot to unpack in there, and it's interesting because if you if you spend your life swimming in financial waters like I've done, this stuff is kind of native to you, and you see it for what it is, you recognize it, and you can make sense of it. But to the average man in the street, this stuff is complicated. It's not something that people are taught in schools. It's not something that you will be served by the news. If you want to understand this stuff, you actively have to go out to try and understand it, and that's it's not easy. And there's a lot of jargon, and there's a lot of motivation for the people involved in the finance industry to keep it a little bit difficult to understand, because they make fees off explaining it to people. It's that simple, right? So the world has changed significantly, and finance and money are at the root of everything in our society, right? I think everybody realizes that you can't do anything really without money. You need money, you need banks, you need to be able to function in society. And so the business of banking and the business of finance touches everybody. Whether you just need to get your money out the bank to perform a transaction, or you're borrowing money to pay for a mortgage, or you're borrowing money for car payments, or you have a credit card. Whatever you do with your life, it's very rare that anybody avoids being touched by the financial system. Very rare indeed. And so the importance of the financial system it's impossible to overstate. It touches everybody, it touches everything, it touches every business, it touches every organization, it touches every school, every family. I mean, it's everywhere. And so what's happened over these last, I mean, we could go back as far as 1987, really, in the crash there, and how the response to that crash, if you want to really understand where this started. But you don't really need to understand it, I guess, until 2000, until the dot-com bubble, when the response from the Greenspan Fed was to just floor interest rates, and hopefully make markets liquid again, reliquify them, get money flowing into the system, get people buying again. And of course, that became quantitative easing after 2008. That became the government printing money and buying bonds to prop up the world. But what they were really doing was propping up asset prices. So if you were an asset owner, i.e. you were among the famous 1%, you got very, very rich, because all the money that was being printed was going into the little corner of the world that you owned. And then we had 2020, when the stimulus was applied again, but it was given directly to the man in the street in the form of those checks you talked about dropping onto the mat. And so that money went directly into the goods and services economy, and that's where we saw the inflation spike. And that's a real problem, because the reason the Fed and the government were able to achieve what they achieved with all the stimulus without inflation was that the money didn't go into the economy, it went into asset prices. And so it gave them a much longer runway. Unfortunately, my friend Jim Grant has this great saying that knowledge in science and medicine is cumulative, but in finance it's cyclical. And he's absolutely right. You get these cycles where we forget everything we did before that was stupid, and then we do it all over again. And so we're now at that point where there's so much debt in the world. Valuations are so stretched on equities and bonds, and governments, because inflation is now a clear and present danger because of the money that's been injected into the system. We all know the prices are going up. We've just seen the tariff announcements, which potentially will lead to even greater inflation. And it's that presence of inflation that stops the Federal Reserve doing what they did before, slashing interest rates, buying bonds. And the bond market is starting to tell you that. If you look at the yields on the 30-year bond in America, it's top 5% now for the first time in I don't know how long. So the same way that Japan kept going up until it didn't, and then it became a very, very different world, and it kept going down. Stimulus and QE and low interest rates will make the market go up until it doesn't anymore. And I think it's not a switch that gets flipped, it's a process. But we are in that stage of the process now where all the things that worked for 40 years no longer work. And asset prices haven't reflected that yet, but smart people are figuring out that the world's changed. and they're starting to move their capital accordingly, whether it's out of the US stock market into European stocks, or out of US Treasury bonds because they don't trust the US government anymore, and into gold, which we're seeing happen. There are renewed capital flows now, which are all driven by by two things: a recognition that the world is different now, we need to act differently and store our capital differently, and then a recognition that the old playbook that's worked so well for so long is not going to work anymore, and to a large extent won't be deployable anymore because of the threat of inflation. So the world's very different, and it's slowly becoming apparent to more and more people, but not to everybody, and not fast enough. There are a lot of people that still believe that the world functions the same. You buy every dip, and the Fed always come in and save you, and as long as you don't sell, you'll be fine. I saw a terrific chart last week that Nib Faber posted, which showed the longest continuous periods in the last 124 years when various stock markets had negative real returns. So basically, if you had money in the stock portfolio after inflation, you didn't make a return on your equities. And the average for the world was 22 years. So the average was a 22-year period in the last 124 where you didn't make money on your stocks on a real basis. The US, I think the longest US period was 16 years. The UK was 20. I think Denmark was the low man of the totem pole with 15. Austria was 96 years out of the last 124. If you can believe that, going back to like 1931. So, equity markets don't always go up and to the right. They have done for long enough that people have forgotten that they don't do that. But the next phase is likely to remind people that there is another way that the world functions, and it's not an easy world. It's not a world in which money falls out of trees and into your pocket.
Yeah, it's you've touched on a lot of things from my documentary series, and Jim Grant's actually in the series, which is nice.
Yeah, yours.
When I made the documentary about the housing bubble, and I was talking about the '87 crash and talking about the 1970s, and even going back to Bretton Woods and the Great Depression, a lot of people were like, "Why are you giving all this history? Why do we need to talk about all these things?" But I really think we're finding out how important that stuff was. And so I mentioned Bretton Woods, and then obviously Nixon completely took us off the gold standard in the '70s. Like, how does that shift going forward? Like, do you think that the governments are just going to be forced to, they already have a little bit, but do you think they're going to be forced to start not necessarily having a gold standard, but just holding more gold and silver? Do you think it's going to be more like retail in the US and in the West is finally going to get into gold and silver? Because even with this big run up in gold we've seen, at least from my perspective, it doesn't seem like Americans give a shit. My mom has her retirement with Fidelity, and I finally convinced her to ask her investment advisor about buying physical gold. And the guy said, nobody's asked me that in 15 years. And so,
which is extraordinary.
And so like as things shift from the dollar, and I'm not saying in the next year or something, like over the next 10, 20, 30 years, with how reckless the US has been and how unsustainable our budget situation is, like I just don't see how the dollar makes its way out of that in a sustainable way. And so obviously they're not going to just go to the euro, and who knows what's going to happen with the yuan and stuff, but like how do you think like this shift is gonna, obviously nobody can say exactly how it happens, I'm not asking that, but like what big trends do you are you thinking are going to play into this?
I think for people watching this, this is the important piece of this puzzle is how to think about this, because you're right, we don't know how this is going to go. What we do know is that the world is very different now, and people feel it. They feel that America's different. They feel like their way of life is different. They feel like politics is different. They feel like financial markets are different. You can feel it that it's different. So if you understand that the world is different now, then by extension, you understand that the world doesn't function in the same way. So if you do nothing more than take that as your base case, then what that means is you have to rethink everything. You have to rethink politics. You have to rethink the dollar. You have to rethink whether the equity markets are going to go up. You have to rethink China's place in the world. You have to rethink all these things. Every pillar that formed the foundation of the world as we knew it. If you feel that it's changed, and you can say, yeah, the world's different today, you have to rethink all those pillars. Now, it doesn't mean that you have to come to the conclusion that all of them are different, but a lot of them will be. And for the first time in half a century, there are things that you can no longer say there is a 0% chance of happening. Until a few years ago, you could pretty confidently put a 0% chance on the US breaking up, of Texas seceding. I mean, unless you're in Texas, obviously the odds are a bit higher. But nobody looking at that seriously was going to say, yeah, there's a chance that Texas is going to secede, or California, or Florida. There have been periods of time over the last 15 years where a lot of people thought Europe was going to break up. That possibility is higher still now. I don't think, obviously, there was an assassination attempt on Ronald Reagan, but since then, we went through Bush Sr., Clinton, Bush Jr., we went through Obama, we went through Trump in his first term, we went through Biden. And I don't think anybody thought that an assassination of a sitting US president was a realistic probability. We know that is no longer a 0 possible. We don't know what it is, but it's no longer zero. If you're factoring that as a 0% chance, you're not thinking about it correctly. It might only be a 1% chance. You don't have to think about it. But for the first time in a long time, you do have to at least give it some thought and think to yourself, okay, if Trump got assassinated, what would happen to the world? And the more you think about that answer, the more problematic it gets, right? As I said to someone, I was talking about this recently, and I said that we saw 2 planes fly into the World Trade Center in 2001, and we saw what happened after that. We saw how the narrative emerged. We saw that it was weapons of mass destruction. We saw an entire war fought on the basis of that turned out to be a war fought under false pretenses. And it led to trillions of US dollars being spent on campaigns in other parts of the world, because the narrative was that it was, Saddam was involved, and we needed a narrative to explain that. If Trump was assassinated tomorrow, what might the narrative be? Would it be convenient to say, well, we've got credible evidence that the Chinese did it, or the Russians? Who would the finger be pointed at? Because it would be a tragedy, but it would be a very useful crisis for somebody. I don't know who, but periods like that are when you can get an awful lot of stuff done. So for us, trying to figure all this out, we need to think about improbable outcomes. We need to think about things that we could safely assume had a 0% chance of happening, and reassign probability to those. And if it's now 1%, you probably don't have to spend much time on it. If it's now 15 to 20% likelihood, then you owe it to yourself to actually spend a little bit of time to think, okay, well, what if? Let's game this out. What happens if this takes place? I mean, the pandemic. No one, if you just said in 2019, what's the chance the entire world will be locked in their homes next year for 6 months? 0. No one has that kind of ability to imagine that kind of outcome. 0. If you said to someone today, what chance they'll have another COVID next year or get locked up? There are a lot of people who say it's a coin toss. So reimagining previously impossible situations is a big part of trying to reach the conclusions. As you said quite rightly, we don't know what's going to happen. None of us do. Peter Schiff doesn't know. Jim Grant doesn't know. None of these guys know what's going to happen. We're all trying to guess and figure it out. And so the more you think about possible outcomes, the better chance you've got of finding the correct one. And that's really all we can do. We don't have control over the future. We don't have inside information into the future. We've just got to look at the various options, figure out in good times, how do we make money out of them? But in trickier times, like times we're in now, figure out how not to lose money in them. And that's again another mind shift. Everyone's been thinking, okay, how do I make more money? Where am I going to make? What's the next stock that's going to double? Where's the next tech unicorn? Now it's a case of, okay, how do I protect the money I've made during the 10 years? All that money I made when markets just went up and up and up. How do I avoid giving that back? Because that would be a real shame, a real shame.
Yeah, absolutely. Um, Jim Rogers and Mark Faber had an interesting conversation that was filmed in the early 2000s that I used some clips from. And they kind of, honestly, I think they foreshadowed a lot of this. But one of the things they said was that as these crashes get worse and as these play out, they were concerned that people would misunderstand why they happen and point their finger at trade, and that multi-decade shift toward free trade that we had. They were predicting that as these crashes happened, the result of that would be, we would get more protectionist. And, obviously with Trump, we've seen that. So I guess with all the tariffs and everything, one of the things Mark Faber says is the end result of all of this is we go to war, because that's what they do when, they think the economy is crashing and their backs are against the wall. They go to war. How are you? Is that a major concern for you with China? Is that something that is that one of those 20% things you're talking about, or one of those 5% things? Like, we've kind of replaced one war with another, just like we replaced one financial crisis with another. So as Ukraine kind of wraps up, like, are you concerned that we're shifting toward a more worldwide scale type war?
Well, your point is important, that these wars do happen in periods of great stress, and Jim and Mark are right to talk about that, because that's generally how it happens. You get these periods in time where you need a good crisis to bring everybody together, and there's nothing like a war against a foreign nation to do that. But again, talking about these improbable outcomes, go back a few years. In fact, in January of 2015, I was on a speaking tour in Scandinavia, and I put a presentation together called "The Consequences of the Economic Peace," and it's still up there on the internet if you search for it. This was January 2015, and I went through the history of kind of warfare in Europe in the 18th and 19th centuries. And I talked about all these long cycle waves and how all this stuff happened. And I spent a lot of time talking about war, and how a war works, and the fact that it tends to happen when you reach the end of monetary cycles. And I showed all the charts and the cycles that demonstrated that. And this was 10 years ago. And at the end of the presentation, the guy in the front row put his hands up and in the Q&A, and I asked him what his question was. And he said, "So are you saying there's going to be a war?" And I said, "No, I'm not saying there's going to be a war, but what I'm saying is, for the first time in my lifetime, there's not going to be a war." Which is, the same point I was making earlier. I thought the chance was no longer zero. This was in 2015. But back then, in my eyes, it had gone from 0 to maybe 5%, if that. Now, with a land war physically raging in Europe, that's 100% chance. And obviously the chance of the US being in a conflict with China is steadily rising. Where's it at now? I don't really know. I know it's not 0. I know it's not 50-50, but I know which direction it's heading in. And I know that economic conditions in the US and China are getting worse. And there's going to come a point in time where a conflict with America is quite useful for the Chinese administration, and a conflict with China might be quite useful for the American administration. And so, somebody asked me recently what my biggest surprise had been over these last 10 years. And I thought about it for a bit, and I wasn't really sure. And then I suddenly realized what it was. The surprise was that I haven't been cynical enough. And if you'd have told me that, because I am by nature very cynical, if you'd have told me that as cynical as you are, you're going to get to a point where you realize you weren't nearly cynical enough, I'd have laughed at you. But that's the reality. cynical about politics, and cynical about motivation, cynical about the media, cynical about how all of this kind of holds together. And so I think, um, whilst it's not fun being a cynic, I think it's important right now to be cynical, to be skeptical, to question everything. And I mean everything. Um, because the world isn't not it not only is the world not as it seems, but it isn't how it has been for our entire lives. So you need to question, you need to be cynical, and you need to be skeptical about just about everything. And I think if you do that, you will find yourself perhaps less surprised by some of the things that happen, and hopefully not caught unawares by some pretty important shifts.
Yeah. One of the tragedies of 2020, I think, was the protests that were going on in Hong Kong. There were massive protests, tons of people out on the streets. And obviously, when they locked everything down, suddenly that stopped, and China was really able to, you know, not have any pushback on their new controls over Hong Kong. As somebody that lives in Hong Kong, do you have anything to say about that situation, or any insights from when you lived there? Or was that something you were surprised by, or was it did it feel kind of
Um,
inevitable?
yeah, yes and no. I mean, Hong Kong, I love Hong Kong. I first went to Hong Kong in 1986, and I fell in love with it. My first 2 hours in that city started a love affair that continues to this day. I lived there for 4 years. I would visit regularly when I lived in Japan, when I lived in Singapore. So I spent probably 30 odd years um, spending time in Hong Kong, and it's changed dramatically. It has, as a Westerner, I find it very different. Um, and I'm sure for the local population, they also find it different. Not necessarily in a positive way, because the Hong Kong Chinese are very different to the mainland Chinese, and it's very much mainland Chinese attitude there now, which is tricky for the locals. Um, it's changed, and I think that the protests did not surprise me at all. The crackdown didn't surprise me at all. Um, you felt the protests were coming, because what the Chinese were trying to do with some of the judiciary and some of the rulings that they were making, you knew was not going to play well with the locals. And of course it didn't. But you also knew that if there was any kind of unrest with the world looking, the Chinese authorities were going to have to crush it, and crush it they did. But it's no longer the Hong Kong that I spent time in. It's no longer the Hong Kong that I fell in love with. That's not to say it's not an incredible city, but it's never going to be the same as it was. And so, I think it's a great microcosm of the world. The world is never going to be the same as it was. And the sooner we realize that, and the sooner we adapt to it, the better. And Hong Kong is just a great signpost.
That really makes me think of all the different cities you've lived in. You mentioned Sydney earlier, and obviously the lockdowns in Australia were some of the most severe that we've seen.
Amazing.
And what the lockdowns did to New York City is just obviously another tragedy. I guess you lived in Singapore as well. What was it like living in Singapore, and like, do you think they're going to continue to boom the way that they have? It seems like obviously they're not the most free on some things, but as far as business and regulation goes, what do you have
Yeah,
to say about that?
it's interesting. Um, Singapore has been a country that's run like a business, which is great. Right? Would that every country was run like a business, be fantastic. Um, and people talk about the lack of freedoms in Singapore. I have to say, I spent best part of a decade there, and whilst I understand there are an awful lot of restrictions in Singapore that you just don't find elsewhere, the nature of them is really, if you don't mess with the government's not going to mess with you. I found the Singaporean government far less intrusive than the US government, far less intrusive than the UK government. So this idea of freedom and Singapore not being a free city, you're a law-abiding citizen going about your business, and you don't want to do anything stupid. I mean, people always bring up the fact that, you get caned, publicly caned, if you bought graffiti, and there's a death sentence for drugs, and all these things that people think are infringement upon freedom. And I understand why they think that, but the reality is, for me, as a man in his mid 40s to mid 50s, who is not going to take drugs, is not going to graffiti anything, is not going to steal anything, or I'm not going to break the law. Singapore is terrific, minimal government interference, clean taxation, terrific infrastructure, brilliant restaurants, great food. It's a phenomenal place to live. And it's interesting that when you're overseas, the thing that everybody wants to talk about, right, is the lack of freedom. And I don't think that's true. I don't think that's true in the sense that people describe it that way. It's very much described as an oppressive society where no one's allowed to do anything. You don't have to do anything because the government will stop you. I found that to be complete nonsense when I was there. But what I will say is that I went back to Singapore last year. I had to do some stuff in Singapore, and I went back for the first time in maybe 6 or 7 years. And it was just a feeling I had, but it felt different to me. It felt as though, as a foreigner, I wasn't as welcome as I had been. It felt as though there was an edge there that I hadn't felt before. It's very hard to put into words. It's a feeling. And when you've lived somewhere for 10 years, you do become in tune with it. And there's a flow to life there, and you recognize how people interact with it. It just feels very natural when you live somewhere for a decade. I went back and it felt very different. And I don't know what that means. I've thought about it a lot in the last year. I don't know what it means. I don't know if it means anything. I suspect it does, but I don't know what. But I found that noticeable. It felt almost like, if I had to put it into words, it was almost like, look, this is Asia, and you guys from the West have been over here for a long time now, throwing your weight around, and we appreciate all you've brought over here. We appreciate all your capital, and we appreciate you building this business, but it's our time now, and we're not going to just live in our country but work for Westerners. It's just, I don't know. It's very, very strange, and I need to go back again, and with that in my head, and try and tune into it. But something felt like it had changed to me.
You feel the same way about London? Obviously not the exact same situation, but just coming back to London and England, obviously it's a much different place than when you first started out there.
Yeah, London's very different. And I've always said, in all my years overseas, when people would ask me, "Did you get homesick?" I would say, no, I never get homesick, because the England I left doesn't exist anymore. They say the past is a foreign country, and it's true. So the England I left no longer exists. England's very different. I think the difference with the UK is, I'm from here. Singapore was a place I lived for a period of time. So I belonged there for 10 years, but I don't belong there, if that makes sense. London is my home. It's where I'm from, and I come here regularly. So I think the more regularly you visit somewhere, the less noticeable the change is. I mean, London is completely different now. It's completely different. Skyline, they've redeveloped enormous parts of London. It's a very different look and feel in parts of London, and London's always been a multicultural city, and incredibly so. I grew up in the school I went to with an incredibly diverse student body. I mean, we had people from all over the world in our class, and it never occurred to us that it mattered where anyone was from. And London's always had that, but it's noticeable now that there are pockets of London that are heavily influenced by different cultures, where you'll go to certain parts of London and it will be full of Middle Easterners, or full with Russians, or full with Chinese, and we've seen this enormous amount of immigration, and people tend to kind of birds of a feather flock together and all that sort of stuff. So you definitely see London Whereas it was a multicultural city, and you would see different faces and different ethnicities everywhere you went. What I have noticed is it feels like they're becoming concentrated in areas now where different ethnicities are kind of are coalescing around a certain part of London, or a certain part of the suburbs, and that's neither good nor bad. It's just very different. That's one of the ways that I've noticed it's changed. Um, but it's still quintessentially English. This week the Chelsea Flower Show is on, which if anyone's been to London they'll know what that is. But there are Union Jacks everywhere, hanging up all over the streets of London, and it feels very British at the moment, which is lovely. Um, but yeah, I don't see the change in London because I'm here so often. It's same, my parents. When you don't see your folks for a year, they age a lot. When you see them every weekend, if you live in the next town, they don't really age. They're just you see them every week. So I'm acutely aware of change whenever I don't visit somewhere for a period of time. But the more time I spend there, the less it kind of materializes for me.
That makes a lot of sense. Since we're talking about England real quick, this when they had the referendum on Scotland seceding, something that I hadn't even thought of going into that was like pensions and people's retirement. People talk about the United States breaking up and everything, and honestly, it's something that I feel like it's inevitable in the distant future at some point. Like we're not gonna have the same border forever, obviously. But when you're stuck on Social Security and all that, like how does a state even secede when everybody's retirement hands are in the hands of the federal government? You know what I mean?
Yeah. Look, and these are the questions that need to get worked out. But the one thing I'm pretty confident in saying, based on how other periods like that have gone, is that there is as near as damn it 0% chance that all this stuff will get figured out beforehand, right? They're not going to figure everything out and it'll be a nice seamless transition. No, it will be utter chaos, and there will be things that get screwed up, and people will get messed around, and it'll be horrendous. It'll be absolutely horrendous. But there's a great time lapse on the internet if you search for it, that shows how the borders in Europe have changed over the last 300 years. And it's amazing. An entire countries disappearing and reappearing and borders moving. It happens all the time. This is the first century that it hasn't happened, really. Um, and look, Europe survived, and America will survive. And even if America split into 50 different states, they'll figure out how to carry on. That's what we do. And my friend Steve Diggle likes to refer to us as clever little apes, and he's absolutely right. We figure stuff out. We've gone to the moon, for Christ's sake. We can figure out how to get along, how to split the pension part, even if it means there's going to be a lot of pain dished out. We'll figure it out. And so, these big shifts, they're scary to think of, really scary to think of, because they upend a world in which we've all become really comfortable. We know how the world functions, and so we don't have to think about this stuff, and that brings us a great peace. We've all, I'm sure, seen in the last couple of years the amount of anxiety it brings that we have to think about Republicans and Democrats and America and China and Russia and Ukraine and all these things that we didn't have to think about before, and now we do, and it's stressful and it's taxing. But it'll get figured out. It won't necessarily be painless, but it'll get figured out, and we'll move on. And then it'll be something that we talked about. Blimey, do you remember all those years ago when, Ukraine ended up ceding half its land to Russia? God, that was, remember, what a pain that was. It's just a way of humankind. That's just what we do.
That's a good life lesson right there. I look back at a lot of the things that I've been able to do in my life, and I think if I knew how much work it was going to be at the beginning, I never would have done it.
Right. Yeah.
But you figure it out, you make it work. One of my favorite books of Jim Rogers is Lessons to My Children.
Yeah.
I know you have children and grandchildren, so just to wrap up, what are the kind of thing, you talked about the furniture business at the very beginning of leaving a business, but what are the things you want to leave to them? Like, what lessons do you want them to learn from you?
Oh, well, Jimmy, look, I mean, I think this is something that preoccupies me a lot. You know, my grandkids are 6 and 4. My daughters are 34 and 28. And so, you know, my daughters are adults. And so I take great pride in watching them navigate the world. And I really, you know, I try to teach them lessons while they were young, um, because I think teaching them lessons when they're in their 30s becomes much more problematic, because you can't impose the lessons upon them anymore. They're grown adults. You know, you have to wait for them to
Mhm.
come to you and ask for advice. And I've said to my kids their entire lives, I said, you know, there are things I can teach you, but there are things you have to learn. And I wish I could teach you the things you have to learn. I would give anything to help you avoid the pain of the things you're going to have to learn, but I can't because you won't listen to me, and you only learn these lessons through pain. I was talking to a friend of mine this past week, funny enough, we were talking about understanding and knowledge and wisdom and the difference between all of them. And as we went through this, you know, I said, I don't know what you think about this, but I think true wisdom can only come from experience, and the vast majority of it only comes from painful experience. You don't really gain wisdom if everything goes right. You only really gain wisdom when something goes wrong, and you have to understand why it went wrong, what you could have done better, what you could have seen that you didn't. You know, these are the kind of things that give you wisdom. So I think for my kids, I've done the best I can in teaching them about the world. And look, I never miss an opportunity to try and make something into something I can teach them, whether it's a personal experience they've had, or an argument they've had with someone, or whatever it is. I try to take those and ask them questions about them. You know, just say, well, did you think about this, or did you think about that, or did you think about doing this, or asking that, or saying that? But just in the form of questions, not, you know, I'm past the age when they were young. I could say, look, here's what you need to do, otherwise you go to bed. Um, as far as the grandkids go, you know, to be honest, at 6 and 4, the lessons that they're learning at that age are really just about, you know, manners and sharing and all those things that you try and teach little kids. I'm far too wrapped up in how much I enjoy their company, and just being with them and playing stupid games, and you know, it's amazing what the amount of joy that brings to you as a grandparent. But I fully recognise that there is going to come a time, maybe not for 2 or 3 years, but that time's going to come where there will be an opportunity for me to sit down with them and talk to them about the world, and talk to them about lessons, and try and teach them things that they're not going to learn in school. Um, you know, I marvel at my 6-year-old granddaughter Ava's reading ability. I mean, it's extraordinary that what she's reading at 6 years old, and I love that. I love sitting with her and having her read books to me, and it's just great. But in 3 or 4 years' time, you know, I will be able to sit down with her and talk to her about friendship, and you know, the kind of things that as a young woman you need to be taught. But I do that in the full knowledge that there are going to be all kinds of things that she's going to have to learn, because I had to watch my kids learn those lessons, and then be there to pick up the pieces afterwards, you know, and give them a shoulder to cry on, and tell them it's not the end of the world, and ask them if they feel like they've learned their lesson, and hope they did, you know. So it's a constant process, and I think all you can do as a parent of growing kids is be there when the opportunities present themselves to help with lessons, um, and always make sure they understand that they can come to you and ask you if they're in trouble, God forbid, or they just got a situation they don't know how to handle. Um, you know, ask, and don't be shy to ask. And I may not be able to give you the answer, but I can give you something to think about, and then it's up to you to make the choice once you have things to consider. It's up to you to choose which way to go, and live with those choices, and deal with any consequences.
Well, I think that is the perfect way to wrap up. I really appreciate you spending this time with me,
Jimmy, we haven't
Grant.
disagreed once, man. I mean, come on.
Well, that's the
Seriously.
funny thing. Everybody thinks it's a podcast about disagreeing, but really, like, you don't have to argue all the time. You
Yes,
can
we
talk
do.
about these things and still learn from.
No, you can't
each other. But I will encourage everybody to check out your podcasts and your investment newsletter, because this stuff that we've been talking about is important. And there are lots of great guests that you've had, and we've had a lot of overlap with the people I've interviewed, but we also have a lot of different people that, you have such a great network that I'm excited to continue to learn from. So do you want to point people to whatever the best way to reach you is?
It's really simple. Grant-Williams.com. Everything's there. If anyone's interested, they'll find it all there. That's the secret.
Yeah. Thanks, Grant. I appreciate it.
Great pleasure, Jimmy. It's good to see you after all this time, man. Let's not leave it so long this time.
Yeah, definitely.
Take a greater risk on these mortgages, yes. To give families mortgages who they would not have given otherwise, yes.
It means we use the mighty muscle of the federal government in combination with state and local governments to encourage owning your own home. That's what that means.
I ask all of you just one more time to look at that chart. And I wish I had a lot of other charts to show you that would reinforce that.
You can't buy a house before you have a job.
You get a job, you save for a down payment, then you buy the house.
A lot of people are going to find out, oh my God, not only is my stocks down, my house is down too, and now what do I do?
Jim Rogers knew these bubbles were going to burst, but I didn't. Neither did filmmaker Jimmy Morrison, who started a house painting business less than a month after home prices peaked. His timing couldn't have been worse, but we don't have to make those mistakes again. There are people out there who called it, and next time, maybe we can too.
We've got a growing economy, jobs, incomes. We've got very low mortgage rates.
Housing is going to be a disaster in the next 5 years. You sell housing stocks and you sell Ben Bernanke.
One myth that's out there is that what we're doing is printing money. We're not printing money.
These days, they don't need a printing press. All they need is a computer keyboard.
So we're not a free market then. There is an invisible, there's a benevolent hand that touches us.
Absolutely. These people in the government apparently don't learn anything at all.
They broke it, and they're trying to fix it by doing more of what broke it in the first place.
The United States can pay any debt it has because we can always print money to do that.
What?
Of course it could happen again, and it's happened before.
Raw materials were allocated between essential and non-essential business.
I hope they don't lose confidence in their government. I can see why there's skepticism, but it's the only government we got.
All this has happened before, and it will all happen again.
The reality is we have gone from a stock market bubble, now we have a housing bubble, and when it breaks, whatever causes it to pop, then a lot of people are going to find out, oh my God, not only are my stocks down, my house is down too, and now what do I do?
Charlie, this was the day we were afraid to wake up to: the bankruptcy of one major Wall Street investment bank, the shotgun wedding of another.
Can't be distracted. What's going on with the war? What's wrong with the economy? Stop worrying about that.
They're not only doing the wrong thing, they're doing exactly the opposite of the right thing.
We got into our mess by spending too much money, running up too much debt, and printing too much money, and that's exactly what we're doing.
Which, by the way, would seem how we got into this state of affairs in the first place.
You have to work for money, kids.
No, you don't. It comes from the machine in the wall. I've seen it. Yeah, you just have to push buttons.